Welcome to today's video technical update presented by CMS Forex. It is Friday, January 22nd, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. This week, the US dollar rallied on the back of safe haven flows, breaking from its recent consolidation mode. Risk aversion also helped boost the Japanese yen. The news of China tightening its monetary policy had to do with this week's sentiment. The euro, on the other hand, had a particular weak performance. Let's take a quick look at the euro dollar, pound dollar, and the dollar Japanese yen, and I'll also cover some interesting moves by the euro dollar and pound yen. This video is being produced at about 4 p.m. Eastern Time at the close of this week's trading. Starting with the euro dollar, this week the declining price action broke below our consolidation range and now is poised to head down towards 1.37 area. Okay, this is here's some Fibonacci retracement levels starting from here and also starting from here. It'll be around the 61.8% area. Now, even in the daily time frame, we see oversold conditions, so there might be, and today's action, if it closes above 1.41, is a reversal signal. So in the short term, there might be some rally towards 1.4250, this 38.2% retracement area, which is coincident with this declining trend line. So starting next week, let's see if there could be some topping action here, and if there is, with the reverse of the stochastic, we may be in our final leg or two towards the 1.37 target. The pound dollar pair, looking here at the 4-hour time frame, this week has broken below the 1.6250, 1.62 support here, and it's poised to continue. But in the short term, we see a bullish divergence here with the stochastic, so we may have some short-term correction. You see, at the moment we are at the 61.8%, so we may have a little retracement back towards the previous high here. Could be a pullback, which means it would be a weak correction rally with topping action, and then that would spell further decline, and that decline would be projected to you see this long-term range here, range support at 1.57, 1.58. Price action here in the daily suggests that is a very viable target, but we can't anticipate further bearish outlook until we do break the 1.57, and then if that breaks and can be established as resistance, then we may have further decline towards the 1.45, throwing a Fibonacci. We see retracement here at 1.45 is around 67.8 to 78.6% retracement. So this is a viable target if the 1.57 breaks. At the moment, a shorter intermediate projection, however, is only to the 1.57, but even shorter term outlook is some kind of bullish or some kind of rally, but it could be just a correction rally. Alright, so start next week, look for some bullish action, but also look at the manner of that rally and where it tops off. If it tops off without making another significant high, then the decline is very likely. And looking back here, the decline here we're talking about is this down to the 1.57, 1.58 levels. Risk aversion helped the Japanese yen as well this week, more so than the greenback. As we can see here, the dollar Japanese yen has been declining this whole week in a rather choppy manner. But at the moment, looking back at the daily time frame, we seem to be developing another leg down, which could swing to the 88.50, 80 to 89 area. Okay, so this would be a swing projection, and it would also be a completion of a bullish Gartley, and from that we would see whether that rally can break our declining trend line, which now seems to be around the 92 area. Before it was around 93, but since we have moved sideways for a while now, The next test may be at the 92 area. Okay. Now, break above that signifies some more intermediate term bullish outlook, and we would basically project this outlook like that and see that our next target could be somewhere here at around 96.50. The important thing is, if this breaks and we could establish this 94 area as support, that heightens our bullish case a lot. See, at the moment we're in a very long-term bearish momentum mode, so to consider the bullish mode we need some more confirmation, such as a throwback that could establish support here above 94. Alright, so for next week, just monitor this decline to see if there could be bottoming action here, and if there is, a rally is very likely to break our trend line here. This week the market invalidated the bullish outlook for Euro Pound. If you need to review some of the previous posts on the Euro Pound for the bullish outlook, but today, this week, it has been invalidated after the break below 0.8850. Today, Friday, there's some correction to this decline. We see the trend line broken, and there's a rally heading towards our previous power line here. The stochastic is overbought, but it has been very strong, so we could anticipate some further rally to start next week. But the important thing is to see whether we have topping action here near 88.50. You see here in the daily time frame, this was the projection from earlier this week after the break. After the break, the projection was to the 0.86 area, which is a swing projection. The market came down to 0.8650, so it was above that projected target, and is showing reversal here. Now, if this reversal may come up, test the 0.8850, 0.89 area, like I said, and if there is topping action here with some bearish signals, then we may have another leg down to test this previous bottom here at 0.84. Okay, so that's the Euro Pound and the short intermediate term outlook. Risk aversion also pressured the pound yen, as we saw this week. The price action on Thursday broke below a congestion pattern. Okay, so now the market, instead of attempting a rally to 153, is attempting to test the support at around 140, 139.50. So this is the intermediate projection to 140, 139.50, but in the short term, we may have some kind of support coming up soon with the stochastic and oversold here, and near the oversold and daily. But rally, which let's if we put up the Fibonacci retracement level, if it comes down here to 143 level, even 143.50 area here to start next week, we may see a rally from that support, but I don't expect it to be a strong one, and there may be some topping action as it approaches the previous congestion area. Let's say here 147. Then if the market does top off there, we have pretty much confirmed this further decline to the 140 area, or not confirmed, but at least heighten the probability of that if the market can top here after a correction rally. Okay, that wraps it up for this week. Visit fxtimes.com for more fundamental and technical updates, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at CMS Forex, wishing you a great weekend.